Hello and welcome to a new edition of CryptoKoryo podcast. So we are starting 2024 with one of the strongest narratives of the year, which is liquid restaking derivatives. I'm very happy to have Amit from Kelp. Hello, Amit. How are you doing?
Hi, Koryo. Thanks a lot for having me here on your podcast. I'm doing great. Thank you.
Amazing. So we have a lot of things to discuss about the LRT narrative, what you guys are doing, the potential of this narrative, where it is going in the next month. There is a lot of anticipation. There is a lot of speculation around EigenLayer. There is also a lot of development. Many protocols are building. You guys are very well positioned. We will discuss about all of these things in detail. But let's start with you. Can you tell us about your background, how you came to DeFi? You are also a co-founder of Stader, LSD protocol, so you have some experience in this sector. And then how you arrived to Kelp.
Yeah, absolutely. So I'm originally from India, born and brought up here. Used to live in Toronto for some time, and then came back to India again. Uh, 2020 is when I got into crypto. Before that, I used to be a management consultant with AD, which is a global management consulting firm working across India, Southeast Asia. And after that, I used to work with India's largest food tech player called Swiggy before jumping full time into crypto. In 2020, 2021 is when I reconnected with my old time buddy Siddharth. And we started exploring the crypto landscape, started getting into different business models and operating and working models of some of the DeFi protocols. And we got really enamored to all the things that were going on in the DeFi space. And we were really excited to build something in the crypto space. And we putting my consulting hat, I realized that staking is going to be one of the largest markets, and we jumped into the space and we built one of the largest protocols on Terra 1.0 blockchain, where we used to have about a $1.5 billion in assets staked with us. And we all know how that ended. But we persevered after that. We are one of the very few protocols that were building on Terra that still survive and manage to grow our presence across multiple chains. So as of today, Stader manages about $350 million in TVL across Ethereum and Polygon, with over 40 plus DeFi integrations and some of the largest ecosystem partnerships with Ledger, MetaMask, and a few other players across the globe. We're very proud of what we built with Stader protocol. While that is growing, in early 2023 is where we kind of started getting into understanding the restaking space and the potential it could have on the overall crypto ecosystem. And in early 2023 is when we realized that you have this restaking uh, phenomenon called EigenLayer that is going to attract a lot of capital, and all the DeFi protocols are going to be. I mean, they're going to face an opportunity cost of serving this capital. So you have, on one hand, you have this behemoth of restaking ecosystem that is going to suck up a lot of capital, and then you also have, on the other hand, DeFi, where there is actual utility for DeFi, for taking loans, for liquidity purposes, etc. So both of these are going to actually vie for the same amount of capital, right? So at the end of the day, everybody has to spend a lot more to attract the same set of capital. So what we realized was, hey, how can we have the best of both the worlds? And with the experience that we have building LSTs across multiple chains, we realized that there could be a potential opportunity for a liquid restaking token that can give users the best of both the worlds, right? That is where the idea kind of stuck to us, and we started building this new protocol called Kelp DAO, which is already live, has about $170 million in TVL, one of the largest. We had just launched about a month ago,
Amazing.
and
So
currently,
let's get back to a bit the basics before delving into the Kelp. So just as some background, so Ethereum went proof of stake. Then shortly after, we had the LSD narrative, which allowed anybody to stake their Ethereum and get some yield around 5%. And this is what protocols like Lido, Rocket Pool, Frax, and Stader, which is one of the biggest one in terms of TVL, were doing. And that was from 2022, from around June, July. And actually, it grew so fast that it's the biggest sector by TVL is still LSDs. And now, can you tell us about what is restaking, and how is it different than LSD? And to also, more importantly, what is it the problem that is trying to solve that we have with LSDs?
Yeah. So I think firstly there is no problem with LSDs. The restaking is a new ecosystem that is getting developed, where the idea here is, can we leverage existing Ethereum network's security or the trust network that exists with thousands of validators running Ethereum validation clients, right? The idea is, can can we utilize that existing trust network to secure a different set of protocols? So that's where the concept of restaking comes in. So essentially, what we're doing is take the Ethereum that is staked, or LSTs that are representation of staked Ethereum that are earning yield already, take that and then help secure another protocol. That is the concept behind restaking. Why is this important? Is that Ethereum has its own set of rules, right? That cannot be customized for a specific applications. The whole concept of restaking is use the same capital but apply a set of customized rules to secure different applications. That is where this gets very interesting, and a lot of protocols or a lot of decentralized applications can be leveraging this concept to build their models and customize their applications using this security. So that's the whole
Exactly.
idea behind restaking.
So you're saying we can actually using these LRTs, we can help secure other networks. Could you provide some examples of what these other networks are, or specifically in your case, what are actually some of these networks that you're helping secure?
Yep, absolutely. So some examples of applications that are using this restaking or restaked assets as security. Still, there is no example that is live on the mainnet. One such example is EigenDA, which is a data availability layer that EigenLayer team is building by themselves, which uses this restaked capital as security, or is planning to use this restaked capital as security to provide data availability at a much cheaper price than Ethereum network itself. So that's one example. A few other examples of these applications that we are working with are, you're probably familiar with this protocol called AltLayer, which offers rollup as a security, where they use decentralized sequences. Today, most of the L2s use centralized sequences, right? Now, how do you decentralize those sequences? You need some external capital to secure these sequences, right? So that's another potential application that could be leveraged by this restaked capital. So there are numerous other examples. One more example is like this protocol called Witness Chain that is kind of building watchtower infrastructure for layer twos. So those could also be applications that can leverage this restaked capital.
Absolutely. So actually, my understanding is that because Ethereum has chosen to have scalability through L2s, and there are a lot of rollups that are being built, and rollup as a service, there will be a lot of new L2s. Like for example, we have Zora, which is just using optimism, and there will be a lot of these layer twos, and they need to validators. And instead of having their own network and building everything from scratch, which requires a lot of infrastructure and technology and cost, then they can use restaking and focus on their core business, and then they provide some yield for the service that they are getting, which is securing their network. Is that a good summary?
Yeah, that's right.
Absolutely. So now, already in a short amount of time, we are seeing a lot of different LRT tokens. Same as LSDs. We had Rocket Pool, Lido, etc. And Kelp is one of them, one of the biggest ones in terms of TVL. Can you tell us about how are they different? Is it just about the API? What are the parameters involved in the differences between these tokens and LRT solutions?
Sure. So firstly, LSTs are just a representation of liquid staked Ethereum. LSTs do not, by default, they are not eligible for earning any kind of restaking rewards on EigenLayer. They are only securing Ethereum network. That means the validators that are running underneath the LST smart contracts, they are only securing Ethereum network. But what LRTs are a representation of staked Ethereum and also the restaked Ethereum. Right? Only LRTs are eligible for earning restaking rewards that EigenLayer could potentially give in the future. Right? LSTs are not eligible. So how is Kelp protocol structured? Kelp actually, as of today, accepts LSTs as collateral and then restakes them on EigenLayer. Right? And soon, within a few weeks, we are also launching a new feature where we also accept Ethereum and then restake that on EigenLayer. So that's the main difference. Of course, there are a few protocols that are building in the liquid restaking domain. A few such examples are Rio, Renzo, and ether.fi as well. So they have also grown in prominence of late. So the difference between us and these guys at the moment is like we are the only protocol that accepts LSTs as collateral. And we all know LSTs is already like a huge market with more than $25 billion in capital that is staked. And these other protocols accept ETH as collateral and restake that on EigenLayer.
Okay, very good. Now, before going deeper into Kelp itself, let's also briefly talk about AVS and actively validated services, because this is an important topic that we will refer to later. So just for the audience to know more about this concept, can you elaborate about what this is and, give more information about AVS?
Could you please repeat your question?
Actively validated services. Can you explain what this is?
Yeah. So just about a couple of minutes ago, I touched upon this important topic about the decentralized applications that will be using EigenLayer's restaked security, right? So the team is calling them as actively validated services or AVSs. And some of the examples that I mentioned just now are EigenDA, which is a data availability layer built by the EigenLayer team. You also have Witness Chain, that's an actively validated service that is building a watchtower infrastructure for L2s. And then we also have decentralized sequences that are secured by restaked capital. So these are examples of some of the AVSs. So AVS is nothing but a service built on EigenLayer that is using this restaked capital as security.
Great. Okay, so with that, we have everything we need actually to now go deeper on Kelp. Now let's talk about Kelp, but let's talk about actually how Kelp was born. You guys built Stader, which is actually a very successful LSC protocol. Um, are you the only LSC protocol? I don't know of any other one which is now also active in LRT.
No, there's nobody else at the moment. We are the only one that has an LST and also a separate protocol for LRT.
Okay, so that's very interesting. I'm very curious if this is if you guys gonna remain the exception, or if this trend will continue, because as we will discuss, the LRT narrative is very promising. So now the collaterals that you accept for now are actually obviously Stader, staked ETH, which is ETHX, and Lido's SD ETH. You are, if I'm not mistaken, considering adding Rocket Pool R ETH and Coinbase CD ETH. Can you elaborate on what are some of the considerations you have while whitelisting? Is it just liquidity, or are there other parameters? And as yourself, you're a LSC protocol, do you provide more incentives for people, if they use if X as collateral because, they are linked?
Sure. So just a small clarification. At the moment, Kelp accepts ETHX, which is Stader's Ethereum, Lido's ST as well as Frax ETH, SFRX ETH as collateral. We just added that this week, and
Okay.
users can leverage that optionality. We are evaluating collaterals to be added in the future. We're building a robust framework for us to add these collaterals. Some of the important factors we would consider are security, time on the network, APR or historical APRs compared to other LSD players, and obviously the liquidity on chain as well as potential availability of withdrawals, where in case we need to redeem the asset. So these are some of the factors that we consider when we are when we are onboarding collateral. But we will make this framework public so that the community can actually comment on it, and we can refine the framework and then use that for any asset onboarding moving forward.
When you say public, do you mean on-chain governance proposals or?
Yes.
Okay.
Yes.
We will talk about this later, but just to be sure. Very good.
For sure.
Now going through actually the process of restaking on Kelp. So users deposit their LSTs, which, as we said, can be ETH, Frax ETH, or ETHX, and then they will get in return the RS ETH tokens, which is liquid tokens that they can then use in DeFi. There are LRT-fi protocols that are building that will allow them to, get a stable coin, trade them or whatever. We will discuss about this. This is the first step. And then these LSTs are deposited into LRT deposit pools. And then you have a bunch of different node delegators from different, networks that you are trying to secure, and you will dispatch these LSTs across a bunch of them. Can you elaborate on this page and this step of node delegator contract? Are there, do you have strategies in place? Is it like equally proportional? How does it work?
So firstly, our idea is to sort of delegate this capital across node operators once we onboard them in similar proportions, if not equal proportions. And then the DAO will kind of take a decision on which services or ABSs to whitelist for these node delegators to validate on. So that's simply how this entire thing works.
Okay. So the nodes that you add will be through the governance, and then the weighting of each of the nodes will also be another parameter that will go.
Yep.
Okay. And so there is no really, so besides these two parameters, there is no really strategy. It's not an active thing where I could say, okay, me as a user, I don't have a say on, okay, I want my LSTs to go on that network or on that other network. Is that correct?
Yes. So users will not have that choice because the whole idea of LRT is to make a fungible token. If individual user has that choice, then the token will not be fungible.
Absolutely. So I've seen in your documentation that you have this thing which is called strategy manager that then goes on, putting underlying tokens. Is this strategy manager what we just discussed about, setting the parameters, or is it anything? Is there more to it, anything else to it?
So the strategy manager is a very technical terminology that kind of sets the addresses for the AVSs to kind of be included in the Kelp DAO list of validated services. But this is a very advanced concept, which even it's not even live on EigenLayer mainnet. So it's probably a little premature to discuss all of that.
Okay. Very good. So we discussed about governance, and I've seen a number of different articles talking about the risks involved in LRTs, which we will talk about later. But then some users are saying we would prefer to have a say on where our LRT goes. And so you mentioned that you have some governance going on. What is the current structure, and can you tell us about if there will be a possibility in the future for users to say, okay, I have this risk appetite, I don't want my LSD to go on that and that network. What is it that you have currently, and what is it that you see implementing in the future?
Yeah. So today we don't have governance live yet because the Kelp token is not live yet. Once the Kelp token goes live, we will surely have governance in place.
Okay, is this
And
yeah,
the
go ahead.
and the major components of governance in the initial days are going to be these following things. One is selection of operators, selection and deselection of AVSs, and potentially there will also be selection of risk committees and rewards management, etc. So all of these will be components of governance.
Okay, very good. So you mentioned about
Yeah.
AVS explosion that will happen in the next month and extra yield strategies. Can you elaborate about a bit about what you see the current trends and what kind of opportunities this will provide to DeFi users?
So one of the very interesting things that will happen is, I mean, I hope this will happen. There is going to be like 30, 40 AVSs that will come and start using EigenLayer security this year. And all of these will generate their own airdrops and potential yield opportunities for users. So that's why I believe strongly believe that there's going to be a lot of users' interest in the EigenLayer ecosystem, and a significant amount of capital will flow into this ecosystem.
Absolutely. So before going back to narratives, can you tell us about what is the roadmap for Kelp? I mean, this is the ecosystem of LRTs are really growing fast. The number of protocols implementing are really, I see one protocol or two every other day. So, what is it on your roadmap? What are you guys building? What's the vision?
Yep. So the roadmap is pretty simple. We are building like currently we are onboarding a lot of DeFi protocol partnerships. We have lined up a lot of liquidity pools across Curve, Balancer, Uniswap, PancakeSwap, etc. And then Pendle is another integration. Soon we are talking to a lot of CDP protocols, lending markets to onboard the LRTs. There's going to be like a ton of excitement among users to use their restaking assets and also be able to borrow those and probably leverage stake those assets. And that's one. The second thing that we have on the immediate roadmap is the team is already building, like I mentioned, another feature which is accepting Ethereum as collateral and restaking that directly on EigenLayer. That infrastructure as well. So, which is probably just about 2 to 3 weeks away, currently undergoing audits. Then we will constantly look to onboard new assets that are secure and also provide users the opportunity to stake the assets of their choice with Kelp. And we also have lined up a lot of distribution partnerships where we'll have this native restaking experience for users on different wallets. Like we soon have I mean, it's still under the works. We soon have like several wallets taking Kelp native integration live.
Okay, that's a lot of things going on. Exciting to see this coming the next month. Okay, so let's talk about the LRT-fi. So we saw actually after LSDs in 2022 and that they got some initial TVL and traction. we started to see actually an entire ecosystem being built, which is now known as LSDFi. And actually, they several different categories came. You're well aware of that. So one could be like CDPs, where you can mint a stablecoin by providing as collateral your LSD. So Libra is a good example of, and Prisma. And then there was like kind of indexing solutions like ETH, where it's by buying one token, it would give you an exposure to all of these different LSDs. We saw yield solutions like Pendle. We saw money markets. So we discussed already about a bunch of them, but what are some of the things that you see are being built on LRT-fi?
Everything that we have seen with LST5 is being built with LRT5. So it's really exciting. And obviously a lot of protocols that were in the LST5 space, they are already we are already talking to them to onboard our assets.
Amazing. So I've seen already on the yield side, Pendle as integrated with ETH.fi. You mentioned that I didn't know you're going to collaborate with them. There is on the CDP side, Agilely, they're proposing USDA. And there is Davos, which is proposing DUSD.
Yep.
On the lending side, there is Yon Protocol. And then there is also, I even saw Omnichain Restaking protocol like Exocore. It seems that the development is so fast compared to what we saw on LSTFi. Can we say that because of what was built on the LSTFi, now is the technical stack is already there, and then it's easier, to switch to LRT as a protocol who as a founder who started with Stader. Can you say that it was an obvious choice for you to build on LRT, and that you didn't face the same challenges, or you had already the experience, and that's probably why we are seeing such a fast LRT growing ecosystem?
So I think obviously one has to be very agile and aware of it, aware of the nuances. Because of we were deep in the liquid staking ecosystem. So this is very natural for us. Obviously, you see a lot of other protocol founders also realizing that this could be a space and launching the solutions in this market. So yeah, it's natural in some way, but also you need to build that deeper understanding about the space to be like the early mover.
Absolutely. Absolutely. I'm myself a narrative trader, and I'm always looking into different trends that are forming and what are some of the new things that we are seeing on chain. And that's why I'm paying a close attention to LRT. And I'm seeing really a very fast growth and of this ecosystem. Um, there is this highly anticipated airdrop of EigenLayer, which many think will be one of the biggest ones we've seen in crypto. Um, and there has been bunch of different, big airdrops in the past. And I'm thinking about a completely different sector, which is NFTs, but with Blur, uh, and a bunch of other examples. Sometimes what happens is that there is this airdrop becomes kind of a top signal, where everybody's just waiting for that, and then getting the as many points as they possibly can, and then as soon as there's airdrop, people go and they start to look into other things. My question is, do you think that this is what's going to happen with LRTs? Do you think LRT will have less of a momentum after this airdrop? And what's your long-term vision, and what do you see in the LRT sector after the airdrop?
So I think you're right. There is a lot of frenzy and anticipation regarding the airdrop. The momentum will sustain if there is a continued source of higher yields on EigenLayer, and then there are continued sources of protocols that are new and building again on EigenLayer that are using this restake capital as security. So that's something that is very interesting and exciting to look at. And then beyond that, if we have adequate number of integrations available or utilities available across DeFi and DeFi stack, then this momentum kind of continues and people will continue to supply Restaked capital while also retaining the ability to use it on DeFi.
Okay, that's very interesting. So let's talk about the yields. So far, the LSD kind of APY was around 5% per year, on what different LSD protocols were offering. And that was kind of like the safest investment you could make on DeFi. And it's kind of the risk-free rate, because Ethereum is a very safe blockchain, which has a lot of, liquidity. And so that was a very safe investment. Now, with LRT, you're adding one more layer and then you're getting more yield. And already with some boosting solutions with airdrop points, and you're offering your points and miles. And now some solutions like Pendle are trying to optimize the yield, and then some other solutions are building on top of Pendle. And so what I'm saying is already, I remember from the 2021 bull market where we had these crazy 3 digits APYs, and we saw that it's not sustainable. But it was built on nothing, right? It wasn't built on something sustainable. Now this time it's a bit different because everything is being built on top of Ethereum blockchain and the validators, etc. However, I'm a bit cautious, when I see that you can get like something like 50%, 30% APY on Ethereum, which is which is already a token that has a lot of potential, and upside potential in the next 2 years. What do you think about the sustainability of and these APYs provided by this now new LRT paradigm?
I don't think the APYs are going to be so high. There is obviously this initial frenzy around airdrops, etc., which is creating this thing. But over a period of time, the APYs will normalize, and I think it'll just be like a few percentage points higher than the ETH staking yields. As long as EigenLayer is able to deliver that at large scale of capital, we will have a sustainable business model around this.
This is very interesting. So we saw after LSDs came, in almost less than 2 years, we saw that it became the biggest actually sector by TVL, and it's currently the case. It actually overtook the lending market as well as the DEXs. Do you see the same thing happening with LRTs, which obviously is providing higher yields? We mentioned about after the airdrop, things could normalize a bit and become, a bit in the more sustainable kind of yields. And this is what usually the institutions like. Some institutions have already shown interest in LRTs. Do you think? How do you see the landscape of TVLs changing now with with LRTs coming?
Yeah, so I think I do think that I do believe that the LRT space and the restaking space is going to grow significantly larger than what it is today. But at the same time, I'm cautiously optimistic about the potential. I think the PMF for restaking, in my sense, in my opinion, will be at least a few, like I mentioned earlier, at least a few percentage points higher than the ETH staking yields. Otherwise, people have no reason to go to restaking. Now, if that were to come at a reasonable scale of capital, then it's a pretty solid product market fit. And then you have this LRTs, etc., having a really good product market fit on top of this, right? And if that grows, there is obviously a fundamentally strong business model for LRT players like us.
Mm-hmm.
And as long as the fundamental layer, which is restaking, continues to grow and there is demand for restaking services, the yield is going to be additive to it. And the moment there is reasonably extra amounts of yield available, then you have these business models like LRTs that supplement these yields with DeFi opportunities. All of these become very obvious choices. or very obvious business models.
Okay, that's interesting. Let's talk about risks. You've probably know about Vitalik's article about a bit being cautious about restaking and the potential risks that it could have, and asking not to overload the Ethereum consensus layer. Can you now elaborate a bit on the risks involved and what could go wrong actually with restaking?
So I think what Vitalik mentioned was like don't overload Ethereum's social consensus. So I think in very simple sentences, what he meant was like in case something goes wrong with restaking ecosystem, some smart contract hack or something happens, don't complain that Ethereum, don't come back and complain to Ethereum that you need to hard fork it. That's what he meant, right? But obviously the risks are slightly overblown in this scenario because fundamentally what people are doing is they're taking LSDs or Ethereum that is staked and using that to secure other networks. So typically the slashing risks are significantly low. So if you take the history of Ethereum or any other POS chain, the number of slashing events are statistically insignificant. So the risks associated with slashing are very low. So all you're doing is using this capital that is securing Ethereum to actually provide security for other network or other application, right? Now, the when we know that the slashing incidents are already very low, and the number of slashing incidents in history are quite low, the risks of concurrent slashing events is going to be significantly lower unless you are taking on an AVS that has inherently high, very, very high risk, right? So initially, any protocol, any LRT protocol will choose AVSs that have minimal risk instead of choosing protocols that have like a significantly high risk. But obviously, given a choice to users, they would want to, and an average user would probably just go with the yields and not have stringent risk management capabilities. That is where the sophistication of LRT protocols come in, where they can help these users assess the risks of these AVSs in the right way and help him uh, provide this provide this simple representative token that gives him also access to these yields.
Yes, but we mentioned earlier, so even though users can know the risk of any AVS, and there are even, let's imagine that there are some analytics, does the user has currently the possibility to say, okay, based on my risk profile, this is what I want. I want a bit of this AVS, like I have, let's say, 10 ETH to 10 stake ETH, and I want, 2.5, 25% of that to go on that one, and 25. There is not such choice right now, right? I mean, for now at least, I'm not aware of any solution providing such a thing.
Yeah, that's true. There is no solution yet that provides risk grading of these AVSs. I'm sure there'll emerge some community solutions that will help users assess these risks and make choices. But it is still, imagine if there are like 50 AVSs that are using EigenLayer's restaked security, users have to go through these 50 risk reports and make their assessment, right? They're not, an average Joe is not going to do that. It's probably going to see like 4 or 5 parameters and filter out high yield, average risk or low risk, and then secure them. Some uh, some adventurous user might just go with like high yield, high risk AVSs, and potentially they might end up losing some money. Hopefully they don't, but potentially there's a probability that they might end up getting slashed or losing some money.
Yeah, the problem is that if they get slashed, then it's their Ethereum that is getting slashed. So at scale, if this is a problem, and this is some of the preoccupations of the Ethereum community, is that the Ethereum blockchain becomes less secure because of slashings that occur on other, networks.
Yeah. So firstly, this has to be like orders of magnitude of scale than what it is today. I believe we'll get there, but I think there are ways in which we can mitigate this risk. Like, for example, majority of the capital that is restaked on EigenLayer today is LSTs. So if an LST gets slashed, it'll only impact that user. Even if it is at that scale, the underlying Ethereum is not getting slashed.
Mm-hmm.
Only the LST is getting slashed. So it doesn't impact any of the validators running Ethereum.
Okay. So now Kelp, that's what I want to know. Kelp as a protocol, we mentioned that for now you don't have governance, and your DAO is taking decisions. What are your considerations? What are the parameters actually, let's say, you consider for whitelisting AVS now?
Yeah, so I think the framework for selecting or whitelisting the AVSs is not out yet. But most important parameter that we are going to have is like the related to the risk. Like the most important thing that we want to ensure is users' capital is safe, and then we are not taking undue risk. And then some other parameters are related to the security of the AVS, whether they are audited by high quality audit firms, do they have a bug bounty and all of that. And then the third one is going to be like the amount of yields that they're giving to the users or extra rewards they are giving to the users. And then obviously the reputation of the team and the community behind it. So these are some potential parameters that could go into the selection framework for the AVS.
Amazing. So now let's go and talk a bit about your experience as a founder. I'm very curious to hear because you got a lot of lessons. I mean, first of all, I didn't know that you started with Terra, so that was probably a very enriching experience somehow in hindsight. But you then built Stader and now Kelper. What are some of the lessons you learned in Stader as a founder that are helping you now with Kelp?
I think one of the most important lessons that I've realized or that I've learned at Stader was relationships are more important in crypto than any other industry. We are a very close knit community, and people still trust other people who they know well. So that's one important learning. The second thing is risk management, because we as a protocol also lost a ton of money in the Terra collapse.
Yeah.
Thankfully, we had diversified our treasury across multiple stablecoins and have not put 100% of our treasury in UST. But that was a life-changing experience where we lost life-changing amount of capital. So it only ignited the risk management, parts of our brain a lot more. And we follow a very, very fundamentally sound and thorough risk management at this stage. Don't chase yields as much. Capital preservation is the most important thing, while deploying capital in fundamentally sound yield generation strategies.
I bet that the Luna experience was for you a perfect
And
lesson for the risk management, and so that's what how dramatic it was. Are there, by the way, just curious, are there any? I haven't followed with the Terra ecosystem, but are there other protocols that survived and are now in a good position in other chains?
yeah, there are a few protocols that have survived, like Kujira, uh, Leap Wallet, who were primarily Terra based, but now they have expanded in the Cosmos network and doing very, very well.
Kujira is doing very, very well. Yes. Amazing. Okay, Amit, thanks a lot for this interview. It was very insightful, and I was really looking forward to talking to you about this LRT narrative, about what Kelp is doing, and it was very insightful. Thank you.
Thank you, Koryo. Thanks a lot for having me here, and thanks to your viewers for watching this episode.